So here's how cash flow explodes over just a few years even, and even more so over a decade and longer as you get more and more income from rent increases. So let's just say you start off with your first property and you're making, let's just, whatever, the numbers are 600 bucks a month. Okay, that's what you're netting after costs. You take in the rent, you subtract the mortgage, you subtract other costs and everything, and you're making 600 bucks. Well, that property is making you 600 bucks a month today. So call that 7,000 bucks a year. And let's just say you put in 100,000 down, you're making about 7%. Now the beauty is there are rent increases, right? What property are you in today? You're either renting or you're renting to somebody else that has the same rental prices you were paying 10 years ago. Everything goes up. And in fact, all leases have built-in increases in them. So you have 3 to 5%. Some markets, rents go up by 10% every year. So it's pretty wild. So now that property that you're making 600 bucks net, next year, automatically you're making another couple hundred bucks a month just from the rent increase. So now call it 800 bucks a month a year later. 2 years later, you're close to 1,000 bucks a month. 10 years later, you're making 2,000 bucks a month, right? And now where you were making 7,000 a year, now you're making something like 24,000 a year, right? So that is where cash flow explodes. And so the more chips you can get down, the more properties you can start to acquire and start to turn into these ATM machines that spit out more and more cash every single year, the better, because that starts to compound. And some of the first properties I bought were making me 300 bucks a month net of expenses. It wasn't super exciting, but I just wanted to start somewhere. I just wanted to get the first couple properties in and to start to accumulate some of that wealth and some of that cash flow. 10 years later, some of those properties are making me 2,000 bucks a month. Times many properties, it gets pretty exciting. And that is how you can really achieve financial freedom. But it does take patience. There is no, get rich quick scheme here. There's no property you can buy and make $1 million bucks a year on right away. The way it works is you have to buy a lot of them and be patient and allow rents to increase over time. The beauty though is that your mortgage is fixed, should be fixed. And so that stays the same. Property taxes won't usually get reassessed for many, many years unless there's a sale that happens. Insurance and other things won't be affected much. And so expenses stay about the same, but as rent goes up, that is all going straight to the bottom line. When rent goes up by 200 bucks a month, that's going straight to your bottom line. And so it's important for you to have a long-term view, a long-term vision of what these investments can be, and recognize that it's not just about your cash flow or your ROI on day one. It's about what this can become over time. And if you're patient, any property, even if we buy it at the tippity top of the market, if you wait long enough, will be producing insane cash flow, insane ROI. And just to go back to that example where we started, where let's just say you put 100,000 down and you're making 7,000 a year, that's about a 7% return. We talked about how, 10 years later, you're making 24,000. 24,000 on 100,000 is a 24% return. I mean, there's really, nobody that can guarantee you those returns anywhere, but real estate can with time. And on top of cash flow, of course, you have all the tax incentives, all the depreciation, the cost segregation, the write-offs from the interest that are saving you tons of taxes. And I mean, I really recommend you talk to your CPA and have them do a little analysis so you really understand the magnitude of how much you save. And you can defer so many taxes as well. And on top of that, you have the appreciation of the property, because as the rents go up year after year, so do the values. And yes, there are ups and downs in the market, Rents don't typically fall very drastically when prices do. It's another beauty of it. They may stay flat. They may drop 5% if prices drop 10. But those are temporary blips. If you're patient, if you wait long enough, it comes back up, always does. Everything's a cycle, like the stock market, like the real estate market, like the interest rate market. You just go back and look at any property 10 years ago, 20 years ago, 30 years ago, and you look at the trend of prices, of rents, and tell me that you can't predict the future based on that. So take a look at that. Be courageous. Buy your first property in the next 6 to 12 months. Make a little plan with whatever you can. If you got 20,000, if you got 10,000, whatever it is, buy a property. Make sure it's at least cash flowing 5% at a base minimum. When you do your math, I have a video that I'll link here that goes into how to calculate that, and I have a cash flow calculator as well that I made for you guys that you guys can use, and take a look at any property, analyze it very quickly, and understand what the cash flow would be year one, and you can kind of assume future rent increases, put it into there, and see what the return, you know, increases to as your cash flow starts to really magnify, and it's really exciting. And I can't tell you how good that feels over time when you look back. It's like planting a tree. The best time to plant the tree is 10 years ago, right? Second best time is now. Although I disagree with that, because the second best time should be 9 years ago, and then 8 years ago. But you get the point. That's how the wise mystics quoted it. So that's what we have to live by here. Plant that tree, plant that seed, and then watch the rents grow and your financial freedom really take off. Best of luck to you all. Cheers.